This is the Precious Metals Briefing with Jerry Williams. Safeguard your money.
Welcome to another edition of the Precious Metals Briefing. I'm Tony Famino, here again with Jerry Williams, the founder and vice president of American Precious Metals in Arizona. And today, you will discover how our institutions are increasingly turning up the heat on investors, leaving gold as an indisputable investment. Today, we've got Brien Lundin. He is joining us as the publisher of Gold Newsletter and the host of the New Orleans Investment Conference, which is the nation's oldest investment conference. It's held annually. And he is joining us today to talk about this issue. And a reminder to anyone that's listening, if you want more information about the Gold Newsletter, it's goldnewsletter.com/PMB 2020. And there's all kinds of good information about gold investing and even more than that. So, Jerry, I'm going to turn it over to you and Brien for today's program.
Well, thank you, Tony, and good morning, Brien. I appreciate you spending some time with us today.
Good morning. It's great to be with you both.
Well, we've got a few questions. Most of them are pretty basic to help our clients, particularly the ones that are just coming on board maybe for the first time or don't have a lot of information. So it seems like right now in the economy, loose money seems to be getting more and more loose. How does this traditionally impact gold, in your opinion?
Yeah, it helps gold. It is, in fact, the kind of the prerequisite for any kind of a long-standing bull market in gold and silver. A lot of people look, and especially people who are unfamiliar with the area, look at geopolitical tensions as being a driver for gold, but they really aren't. They come and they go. They're flashes in the pan. And the only people that ever profit from that are the really nimble traders who get in immediately and sell quickly. Otherwise, the average investor or trader who tries to take advantage of those kinds of situations ends up losing money, kind of holding the bag that's left to them by the more sophisticated traders. So the only thing that really drives gold over the long term is concerns about the value of the currency. And that happens when there is more currency created, in that every new dollar that's created by, simply the keystroke these days at the Federal Reserve, that dilutes the value of every other dollar in circulation. So when that happens excessively, as really it has been since 2008, and then it's just gone to warp speed since this COVID pandemic, those concerns are raised, and that concern accelerates the interest in gold and buying in gold. And that's really the only fundamental underpinning of a long-term bull market. When the public really starts to get concerned about the value of underlying currency, that's when gold and silver really shine.
Well, Brien, I'm sure you remember Ron Paul. He was always a watchdog looking out for us there in Washington.
Yeah,
hard money advocate. Is there anyone like that around or on the horizon that has any interest in protecting our currency and tightening things up?
Not really. It seems like both sides of the aisle have now acceded to, blank check mentality as far as government spending. They're just kind of, giving up the fight, as it were. The Republicans seem to be pushing back on the stimulus program, but it seems like they're doing that really only to be in opposition to the Democrats, and not from any kind of a, more fundamental philosophy or ideology. There's really obviously nobody like Ron Paul. There are some in Congress who are better. Rand Paul, of course, to some degree, that are trying to slow down the rate of spending, but it's a minority, and it's really a bidding war when it comes to special interests in spending more money. And, even more important than that, there's no Volcker, in charge of the Federal Reserve. There's no Paul Volcker anywhere, meaning someone who could really stand up and raise interest rates and halt this process of not just easy money, but ever easier money that the markets are so addicted to. So, no, I don't think the political environment is helping or even slowing down the trend in any way. And in fact, it's actually accelerating.
It looks like Janet Yellen may be appointed to Treasury Secretary. You think that'll have any effect on anything there?
Yeah, Yellen was famous for saying that the Fed's raising and normalizing of interest rates was going to be as boring as watching paint dry. And in fact, the paint never dried. They made a half-hearted attempt, and then the markets just threw a big hissy fit and gave its marching orders to the Fed and the Treasury to stop this nonsense and get back to loosening the money supply. And they started. And a lot of people don't realize, but essentially the Fed had reinstated quantitative easing months before the pandemic started. They started over a year ago. They started at the end of August, early September of 2019. And of course, we didn't see the pandemic really emerge until March of 2020. So months ahead of the game, half a year ahead of the pandemic, they were already expanding the Fed's balance sheet once again.
Yeah, they said they wouldn't do that unless the inflation rate got above 2%, and they still say that's what it is. But what do you think the real inflation rate is?
Well, the real inflation rate is obviously much higher than the CPI indicates. And, in fact, today's CPI is not the CPI of the 80s or the 70s. They've jiggered with the calculation a number of times, using really arcane, crazy things like hedonic deflators and substitution and all these other things that really underemphasize the actual rate of inflation. And in fact, it is an inherent. It doesn't have to be any kind of conspiracy theory or anything. There's an inherent bias in the system because of cost of living adjustments from the government, et cetera. There's a bias to underreport inflation that's already in the system. So it over time, it has understated the actual rate of inflation. And, that's just one part of the whole conundrum. The Fed right now says that 2% level that it was aiming for is no longer really a target. They hope to actually get the rate above 2% over time, and in fact have an average rate of 2% over a long time period. So if we've been below 2% for the last 5 years, they want to be well above 2% for the next 5 years to average it out over the long term. The problem with that is, they're going to try and put the inflation genie back in the bottle when the genie only has 1 foot left in the bottle. And as we know, that's not an easy job to accomplish. In fact, no government, or really nobody outside of Volcker, has ever been able to do that. It takes such political will, and that's just plain non-existent today.
Well, yeah, they behave as if this debt just doesn't matter. They kind of don't they realize or care that they're gambling with all of our futures?
Well, they figure that's somebody else's worry. Their job is to kick it down the road again,
Right.
like everyone else has. And I've been in this business for over 35 years, and I've heard lots of people predict the debt bomb and everything from the stage of our conferences over the years. But now it's really to the point where it's a matter of simple math. I mean, you don't even have to have much in the way of predictive powers to see that if we ever had interest rates that were positive on an inflation-adjusted basis, subtracting the inflation rate from the interest rate, if we ever had interest rates that were positive on a real basis, the cost to service the monumental debt that we have right now, it would crush the federal budget. We would be paying, if interest rates, if the Fed funds rate got to 3 or 4%, just 3 or 4%, we would be paying over $1 trillion a year in debt service payments just for the federal debt. And at that point, there's going to be such a hue and cry from the more liberal wings of the political spectrum for a debt jubilee and just default in the debt. And that would crater the value of the dollar and, of course, send precious metals soaring.
Well, as you know, a lot of big-name hedge funds are now publicly disclosing, like Ray Dalio, for example, Stanley Druckenmiller, and even Warren Buffett, disclosing their gold investments. Do you think this move could, since establishment people are now in here, this could be the big one?
Yeah, it raises the hairs in the back of the neck of a contrarian to see kind of a consensus view, in one way, in seeing all these big mainstream investors agree. However, they're agreeing because it is so evident at this point and inevitable. Just the sheer size of the debt means that there has to be some very significant depreciation in the value of the dollar. And that's just in the U.S. The same situation is across the world in every developed and even undeveloped economy. So it is the prescription throughout human history that has always happened when debts have grown too large, when they've grown unmanageably large, that the underlying currency has to be depreciated. The Romans did it, the ancient Greeks did it, the Sumerians did it, everybody did it, and it's going to happen again, and it has to happen again. So this is just Ray Dalio and the rest recognizing a reality that's just staring us in the face. There has to be depreciation of the dollar over the long term, and that doesn't mean that we're not going to see these stomach-turning declines in the value of gold here and there, and these real jiggles along the uptrend line as it goes higher and higher. That's the job of a bull market, to try and shake out the weak hands. We need to keep looking at this inevitability of a much greatly depreciated dollar, greatly depreciated fiat currencies, and greatly appreciated metals prices on a relative basis. That's what's going to happen over the years to come. And we need to keep an eye on that horizon and not let these short-term fluctuations scare us or shake us out of the market.
Well, let me ask you this, because I ask this of everybody I come in contact with, particularly on newsletters and opinions and things like that. I've always asked, do you think there's likelihood we'll have a revert to a gold standard to save all the currencies? And virtually everyone I've talked to recently says, no, that's outdated. It's not likely to happen. Do you have an opinion on that, about the return to a gold standard?
Yeah, in today's day and age, there are some real difficulties in getting that point. And, even as brilliant of a guy as Milton Friedman said, that it really wasn't possible anymore because there's an underlying need in Milton's view, a requirement for a central bank to be able to come in on an emergency basis, et cetera, and provide liquidity to the markets. If you have a hammer, all you see are nails everywhere. and giving this kind of power to central bankers, they're itching to use it, and they always think that they can do better than the free market. So they want to be able to manage the flow of money to some extent, and it's going to be hard to break people of that view. And the gold standard, of course, runs completely contrary to that. It's the goal of the gold standard is to prevent governments from being able to manipulate the money supply to any great extent. But I think there are actually middle grounds to this. There is the possibility at some point, and I think at some point the necessity of a reset, because the debts are so large, of a connection between the dollar and gold to some extent, and then allowing the central bank to adjust that linkage. So as Jim Rickards has famously shown, if there's only a 20% backing of M2, you're talking about a gold price of, say, $10,000 an ounce. Now, that's very easily done, and it's very easily adjusted once you do that, and it would restore instant credibility to the value of the dollar, which at some point I think is going to be needed. And it would have very little effect on the markets, on the industry, because jewelers would just lower the carat value of the gold in the jewelry. And the other usages of gold are so limited that the price makes very little difference for the product. So it could happen very easily. So I guess I would, that's a long way of saying it's would be very difficult to have a gold standard in today's world. But I think we're approaching the point where some linkage to gold will be inevitable and absolutely necessary.
Well, it would have to be international, of course, with the International Monetary Fund or the World Bank, and now you have China as a full member of the International Monetary Fund. So it'd be interesting to see how that works out, because nobody knows for sure how much gold China has, and they would be a strong influence. Do you have any numbers?
Yeah.
I saw something recently. They may have 20,000 tons, which is more than anybody else by a long shot.
Yeah, I don't think they have quite that much. I have followed the work of Jan Nieuwenhuis, who since about, I guess it was around 2013 or so, has been calculating the actual gold demand in China. And I think, they report, if I remember, about 2,800 tons of gold. I think most people figure that they have about double that. But consider, too, that in China, private property is not allowed. And in fact, private property is the property of the state. So China has been encouraging its citizens to buy gold for about the last 10 years on a very, very active basis. So China really considers gold in its citizens' hands, what we would say would be private gold, to be public gold. So their de facto gold reserves, the way they review and the way they view it, and with their capital controls, is much, much higher than even what they would report publicly or silently as their gold reserves, central bank gold reserves.
Well, just looking at the markets now on a technical basis or any other economic basis, do you have a projection for next year, sort of on the line of Merrill Lynch and Goldman? They're looking for $3,000. What do you think?
That would not surprise me. I prefer to keep my price projections a bit lower, just to retain a little credibility I have left. But I would say next year $2,300 is very achievable. But 2020 has taught us that the business of prognostication isn't what it used to be. There's nobody that predicted virtually anything that happened this year. So it's just a stab in the dark, and I sure hope that 2021 will not be as surprising and dramatic as 2020 has been. But yeah, I at bottom, I think $2,300 would be very easily achievable for gold as we see these spending programs.
I've said jokingly here recently, it seems like every time I put out a number, like looking at a chart, would be here by this time, I've just given up making predictions, particularly about the future.
Yeah.
Anyway, some people get it, but anyway, while we're on the prediction thing, what are your thoughts about silver? We haven't mentioned that at all. It's very popular with us. Yeah,
silver is always profitable. I tell people that when I first got into the market as a wet behind the ears youngster, writing copy and editorial copy for Jim Blanchard, Jim kind of took me under his wing, and one of the first things he told me was that, Brien, gold bugs are crazy, but silver bugs are effing nuts. And it's absolutely true, because silver is the natural lever to the gold price. It's much more volatile, and it's much more affordable to the average person. So it is the poor man's gold. And I absolutely love silver, because in any kind of a bull market that's monetarily based, that's based on these long-term monetary concerns, a real secular gold bull market, silver always outperforms gold, and considerably so. So I tell people, if you like gold, you have to love silver. And it's a great way to have precious metals holdings also. They're more easily divisible and actually spent in the case of kind of the ultimate emergency situation, which we may not expect. But if you're buying gold, if you're buying precious metals to hedge against any eventuality, you might as well hedge against all eventualities.
Right. Well, if the economy recovers, which it looks like it might, one of the things we look at for an indicator is the price of copper, which just hit an 8-year high, $3.50 a pound. It used to be that you would be suspected maybe the Chinese were hoarding copper. I had no evidence of that, but certainly the mines are gearing up, and it's very profitable at $3.50 a pound. It would indicate that automobile demand, housing, all the uses for copper are going to be, up in the coming year.
Yeah, it does. We actually made a call that was kind of unnoticed at the time, but I'm very proud of that. in our August edition of Gold Newsletter, we called a gold bull market in copper. I mean, not gold bull, a bull market in copper. And it certainly turned out to be that way. And that's largely the result of some supply disruptions. There were going to be significant supply disruptions regardless of COVID around the world. And copper was shaping up from a supply-demand standpoint to be for a bull market before any of this happened. So then we had COVID, further curtailed supplies, and now we see signs that demand is going to grow again while we still have the supply deficits. But one of the things people are missing right now is that it's not just copper. If you look at some of the broader commodity indexes, they have also broken out into bull market trends. Nobody's really talking about that right now, but we've been talking about it in Gold Newsletter. And that's, as you know, that's the typical pattern of these kinds of bull markets. It starts in gold, then comes into silver, then it spreads into base metals, and then you have a broadening into a much wider array of commodities. You know, we've seen, if you invest in the stocks and the equities, the junior mining equities, we see that these gold stocks go first, then the silver, then you see the copper, zinc, then you get the weird things happening like rare earths and battery metals and uranium and things like that. And that's going to happen again, I think. And I think it's already happening.
Yeah, you're right. Electric cars are going to be a big deal, too. I just rode in a brand new Tesla X a couple of weeks ago. It's very exciting.
Wow.
One of the things, I forgot to ask you about your New Orleans conference. How was that going? Did you get canceled because of the pandemic?
No, we went virtual, and it was a spectacular success. What I did in this case was go virtual, but also figure that if I'm going virtual, I had the ability to bring in speakers from around the world. You know, they don't have to hop on a plane and fly into New Orleans and spend 3 or 4 days traveling. I don't have to pay for them to do that. So I could go out and find the best experts across the world and bring them in virtually, which I did. And I think our speaker roster was absolutely incredible, probably top to bottom, the best we've ever had. And we had, an upsurge in attendance So the other thing we did with that was change the model for the conference into more of a membership model. So we had this 4-day great conference, intense information, and recorded every bit of it so that our attendees could review it all year long. But then we started providing more events, panels and webinars and private Zoom calls with experts and companies that's only available to the attendees or the members of the New Orleans conference. So they pay one price and they get access to all of this information all year long. So it's worked out great. We've had a huge response to it.
I assume some of this information filters out into the Gold Newsletter, right? So if you're a subscriber there, you're going to get this information on a monthly basis.
Absolutely, yeah. If they subscribe to get all the information from Gold Newsletter, we cover the precious metals markets. We cover a vast number of companies in our portfolio that have been doing extremely well. These junior mining companies in this market. I mean, some of them are multiplying value within weeks, and then they also get information on how to join the New Orleans conference, where we talk to all of these experts on an ongoing basis and give, and this is information that's never available on YouTube or any other public forum. It's only available to the New Orleans conference members. And frankly, therefore, these experts feel much more open in speaking their mind because they know it's not going to float out there on the internet forever.
Well, that's a little bit offbeat, but I get these questions all the time about Bitcoin and why don't we accept it and how come I don't own any and what do I think of it? Do you have an opinion on Bitcoin or cryptocurrencies in general?
Yeah, I think it's going to be something. I really do. I also don't think anybody knows what it's going to be. It shares a lot in common with gold, limited supply. Its advocates approach it with, kind of a religious fervorosity. It is, in my view, when you buy it now, you're if you look at it dispassionately and not with a real emotional view that it's going to be money, because we really don't know yet, you got to look at it like a tech stock, like a pre-revenue tech stock, like buying an Amazon or an Apple at some point along their evolution. You just don't know what it's going to be. It's a speculation at this point. And I don't think it can work as money, it can function as money, as currency rather, when it can have 20% value fluctuations in a day. So, how do you sell? Yeah. And how do you sell, except a Bitcoin, for instance, in payment for gold, when you have a hell of a problem to begin with to adjusting your prices to reflect the fluctuation in gold? You have to hedge your metals exposure and everything else. Then you're going to have to hedge Bitcoin. So yeah, that's going to really limit its acceptance. And while it excites the speculators involved in it, it really limits its usefulness.
It's the same thing as like trying to trade rhodium, for example. It's rare and it's valuable, but there's no futures market. There's no way to hedge it. In fact, at least rhodium is something you can feel. Bitcoin is kind of out there in the ether. So I'm not very fond of it myself.
Yeah, and rhodium, has shown some examples when it's gone up 50% in a day, and really over the past year. And the bid-ask spread on that is, can be 20, 30% or more. It's crazy. And when do you buy it? How do you buy it? And it's really not liquid.
This has been fascinating, and I really appreciate your taking the time. You're very knowledgeable, obviously. You've been around almost as long as I have, but you certainly have. Well, I started in 1971, actually, about the time Jim Blanchard started that committee to reestablish legal money way back there. So, yeah, it's fascinating to talk to you, and I really appreciate your point of view on everything. I guess I should probably wrap this up since we're out of time with my normal closing, quoting the Wizard of Id, who is famous for saying, "He who has the gold makes the rules."
You've been listening to the Precious Metals Briefing with Jerry Williams. To learn more about safeguarding your money, go to apmaz.com or call 800-522-GOLD.